Hearty greetings to everyone. This is Pastor Efe. Today we'll be talking about the ABC of future trading. Future trading is an aspect of crypto that a lot of people dare to give a trial because of the high risk involved. After today's training, you should be able to comprehend it and see how you can make a fortune trade. Before we delve into the topic, I would like to let you know that crypto can make you an overnight millionaire if you take time to learn. Invest 6 months into just learning crypto via virtual mentors like myself, YouTube, Binance Academy. I want you to know that 1 hour a day into crypto will transform your financial life. Your financial life will never remain the same. Before I delve further, take a look at this. Hello, courtesy greetings. This is Pastor Efe. Take a quick look at this. This is my future trading account. This is my account history for this month of January. Now, the last trade I made was people and the P&L, that is profits and loss. The profit I made was $208. Then this is SPA. I made a profit of $587. Look at Goldfin. I made a loss of $9. Look at Baby Dodge. I made a profit of $1,289. Look at Baby Dodge. On the 2nd of this month, I made a loss of $208. Now, what this implies is that people are still making it big time in crypto. I actually decided to upload this clip just to let you know that you shouldn't give up on crypto. A lot of persons have made losses in crypto as a result of lack of knowledge, high level of fear, and greed. In a nutshell, I want you to still know that you can make something out of crypto. What you need is a good knowledge and strategy. If you have a good strategy, you're good to go. So this year, you can make something great out of crypto. All you need to do is map out a little time to learn, study, go on YouTube. All you need is there. I repeat, all you need is on YouTube. Read, download articles, read, and before you know it, you break even. That's it. You will break even. All right. Let's go back to what we have for the day. Today, we'll be covering differences between spot and future trading, trading terminologies, leverage trading principle. Then we have our session of question and answer. All right, let's dive in. What are the differences between spot and future trading? Before you can know the difference or differences, you need to answer the question, what is future trading? And secondly, you need to answer the question, what is futures trading? So in a simple term, in spot trading, you trade real assets with your money. While in futures, You trade underlying asset with brokers' money. Let me explain that further. Let's say, for instance, right now, you have a sum of $100, 100 USDT, and you wanted to buy BTC at the rate of 44,000 US dollar for one BTC. Your $100 can only buy 0.0023 unit of BTC with $100. Then, if you decided to sell that 0.002 BTC at the rate of 54,000 US dollar, that is the price of BTC have what appreciated upward, then it will end up giving you a total of $122. So you made a profit of $22. Now, note it very well that this BTC that you bought, you were giving the real BTC, that is to say, unit of BTC. So if the value goes down, your BTC will still remain with you. But when it comes to futures, it's an underlying asset you are trading. You are trading like you are buying a virtual coin, not the real coin. So take a look at this now. With your same $100, you went ahead into futures trading and you met the brokers. The exchange are called brokers. And you met them and said, okay, I want to buy BTC. So what they are going to do for you is that they're going to borrow you extra money to buy BTC. So if you should give them your $100, they can give you times 5 of that $100, give you times 20, they can even give you times 100 of the $100 that you brought in. So let's assume you are going for just what, times 5. That times 5 is what we call leverage. We'll explain it better later on. So you went with your $100 to the broker and you said, please, I need times 5 of this money, and they gave it to you. So which will automatically become what? Will automatically become $500 dollar. Then you use that money you borrowed to buy BTC at this same 44,000 US dollar. Now it's going to end up giving you a virtual BTC of 0.0114 BTC. So then you decided to sell. You sell this BTC at the rate of 54,000 US dollar, the 0.0114 BTC, which will amount to a total of $615. So you can now say that you ended up making a total of $115 as a profit for selling this BTC 0.0114 at 54,000 US dollar, plus your $100 capital that you took to the broker. So you have a total of 215 US dollar. So what this implies is that you can see the difference, that at this same price, at this same price of 54,000, your $100 only gave you a profit of $22. While in future trading, it gave you a profit of 115 dollars. That is what makes future trading unique. All right, so let's move on. So we are moving on to terminologies. What are the terminologies you need to understand? Number one is open. Open simply means for you to initiate a trade. That is to say, in spot trading, we call it what? Buy order. What we see in spot trading is buy. But yeah, we call it is being called open. That is, you initiate a contract. It's a contract you're actually initiating.
because you are not really giving the actual asset, you are giving the virtual asset. So it's a contract that goes with it. Then we have what we call close, that is to say to exit the contract. And whereas in spot trading, it is sell. So you will have buy, sell. While in close, in future trading, we have open, close, which also simply means open, buy, close, sell. Then we have what we call long. This is one interesting thing with what? Futures. Futures, you can actually what? Trade when the coin is moving upward. That is to say, you made an analysis and you know very well from that this coin will go upward. You can what? Go long and make a contract that the coin is going upward. Then, based on your analysis also, you can also what? Make a trade when the coin is falling. That is, when we talk about shorts, short simply means that based on your analysis, the market is going to fall downward. So these are terminologies in future trading. And the last but not the least is leverage. Very, very important. Leverage is the borrowed capital. The borrowed capital. Just like as we explained, you went with just $100 and you borrowed times 5 of your $100. And as I said earlier, you can even borrow as high as times 100 of your $100, and they will give it to you to use it to trade. But there are terms and conditions that surrounds it, which you will get to know in the long run. So leverage. Let me explain the leverage in detail. Now, leverage, it actually shows how many times your initial capital is multiplied. So as you can see, we have one ratio what you want to borrow. So if, for instance, right now you had $100 and you want to go ratio 10, that is to say your $100 will give you a total sum of 100 times 10, that is 1,000. So if you had wanted to just go 1:5, that is 5x, 10x, 20x, even up to 100x. So if it's 5x, that is just 500 what? Dollar that you'll be given. So they will borrow you extra $400, which will make it $500. So it is 1:5 or 1:10, or even to 100. But the least is 1:2. That's the least. All right. So now this leverage, it is where the bone of contention is in crypto. A lot of people have told me that futures trading almost sent them to their village, or future trading almost mar their future. And at the same time, some people have said, oh, future trading has helped me to make a future. Yes, futures is highly lucrative if you understand this area. Very pertinent, very, very important. Leverage. Your understanding of this leverage will help you to be able to make something great in crypto, in future trading, at the same time to make a huge loss in what? In crypto, your understanding. So now let's move on. Now, if you decided to say that, okay, I just want to borrow 2x of my initial capital, that is times 2. What it simply means is that, let's take for instance right now that let's go back. Let's go back to the initial example. Okay, good. Now, let's say at this moment, you only borrow just 2x of this. 2x of this. It simply means that if the price of BTC should rise up 50%, that is when you can actually make 100% of the actual money you borrowed. So like this one I gave you, this example I gave you, if you should go and do your calculation, you will realize that I used 5x And this 5x from here, it shows us that using 5x, it simply means that leverage is that that if the coin should rise 20% upward, you will what? You will have 100% of your initial capital. Now, look at this. Look at this. Let me still go back and explain this in details to you. Now, looking at this, remember really very well that I bought at this price and I sold at this price and I made these 22 profits. And I bought with my leverage, with 5x leverage, I bought at this same price and I sold at this same price and I made above 100% of my what? Of my initial capital. With the same $100 that I use in trading in sports, I brought that $100 to futures, and at this same price, I made what? At this same price, I made 100% of my, above 100% of my initial capital. So what this simply implies is this: if I'm to make 100% of my initial capital on spot trading, it simply means that the value of BTC must move 100%. That is to say, the value of BTC must become 88,000 US dollar per BTC for me to be able to make $100, which is 100% of my initial capital. But with just what 20% move from this 44 down to this place is just what 20% movement, just 20% movement, and it gave me what? It gave me 100% of my initial capital. That is the what the leverage we're talking about. So that is what this actually implies. So when what the leverage I'm using, as I used 5% here as the leverage, as the price of the coin moved to my direction 20%, I made profits 100%. So if it moved against me 20%, I will also make a loss 100%. I'll make a loss of 100% of my initial capital of $100. But as it moved in my favor, I made a profit of 100%. So that is how what future trading operates. So if you are using 10%, 10x leverage, remember that the movement will be 10% movement, either upward or downward, before you be liquidated. If I make 20% what leverage, if I use 20% leverage, 20x, it means that the movement of the asset I'm buying will need to move either 5% upward or 5% downward. Then I'll make 100% of my capital, or 100% of I will lose 100% of my capital if it moves against me. So that is how interesting what future trading is. So let's move on to a very crucial aspect of this training, a very crucial aspect of this training, which is the principles, the trading principle. Very important. Now, number one trading principle is the standard capital trading percentage. The standard capital trading percentage for crypto is actually 1 to 2%. As a beginner, yes, you can keep to this, but in the long run, as you become a professional, you can actually increase the percentage. Then secondly is don't trade P&L. P&L means the profit and loss. If you trade P&L, you will never make it in crypto. You have to trade a strategy. You need to have a strategy that works for you. Trade strategy, not P&L. What do I mean by P&L? For instance, right now you might be trading and suddenly you just notice that the coin is moving against you, and you'll be seeing that your money is depreciating. You might like, I'm losing. Let me exit the trade. And immediately you exit the trade made a U-turn and moved in your favor. But because you have exited at loss, then it's gone. Or maybe you are making profit. I say, I've made $50 now. Let me quickly withdraw this money. You can turn against and you withdrew the money, and you got to realize that the coin would have given you like 300 US dollar. So that is P&L. So don't trade P&L, trade strategy. You need to have a good strategy. And if you have a knowledge of forex before now, then apply the same thing in crypto. Then if you are good at trading spot, apply the knowledge you are using in trading spot on futures. You will say that's going to work with a few guidance. It's going to work perfectly well for you. Then also always remove your profit from the trade. This is very important. Always remove your profit from the trade. Some persons, when they start trading, they made $100 profit. So, oh, wow, interesting. Yes, they continue trading with it. They made $300 profit. They continue trading with it. And before you know it, there could be one trade they will enter, and that trade will wipe away both the profit and the capital. Yeah, it happens. It always happens. There's that particular one trade you're going to trade that will mess you up. So, but if you're the type that you always remove your profits, whenever you encroach such a trade, it will just be a portion of your profit that will be lost and not all, because you might have ever ended up making your capital and having extra profits. And what is left on the trading account is just profits. So always remove your profit from the trade. Then the last but not the least is don't increase your capital until you have made 3x of your trading capital. Some persons, you started the trade with $200 and suddenly you made $300. Say, oh, wow, this guy is cool. And you decided to go and bring in $500 to add to it. And you made a trade again and you, wow. And you decided to go and bring 1,000 US dollar with it. There's that particular trade you will enter that might mess everything up. So it's better you trade with that capital. Once you have made times 3 of that capital, then you can increase what? Your trading capital. Thank you very much. It's time for question and answering. Well, before we answer this question, I want you to please, I trade futures. If you want to know more about trading of futures, you can always reach me on WhatsApp. Here is my WhatsApp number: +234 80 366 02905. +234 80 366 02905. And I will also send you a material that will give you all the information you need to know about crypto. That when you read it, it will enlighten you. And not only that, I'll also give you a link that can help you to practice a demo, a future demo. So contact me and you will really appreciate that you did. Thank you. You can ask your questions now.